The world has changed. Future without boundaries is just around the corner. The way we live today can become obsolete tomorrow. A whole new dimension driven by the evolution of AI and virtual reality. Are you ready for the inevitable?
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together there is no stopping us.
Good afternoon, everyone. BC Richfield here, coming to you live from Suffolk. It is a slightly overcast day here, but I'm feeling positive, back in the saddle, and great to be back with all of you. How are we doing today? Big shout out to everybody that's watching this live, as well as everybody that watches this on catch up as well. Special mention to everybody in the chat this morning. Nit, fantastic to see you, mate. First one in again, smashing it on that front lately. Erica, wonderful to see you. Gio, Craigie boy, Touche, good morning, my friend, and everybody else that's tuning in. We got a lot of people in today from Twitter as well, which is awesome to see. So a big shout out to all of you. So let's, before Erica reminds me, let's make that a little bit bigger. And I just wanted to start on a little higher time frame today. So, guys, I am at your mercy here. Craigie boy comes up with a brilliant point we're going to take a look at in a moment. Just started to confirm a change in state of delivery, which is what we're going to look at. And actually, I want to kind of base a little bit of today around that as well, because it's something that I think a lot of people overlook. It's kind of realigns with our order block theory and stuff like that as well. But also, you know, when we look at traditional market setups, we're looking at like engulfing candles here. That's also what we're looking at when we're looking at change in state of delivery. You overlay all of those kind of points, and it makes sense how so many systems, bots, algorithms, etc., can target those areas. I'm a really big believer. For anybody that's new to the stream, I'm a student of ICT, very proud of that fact, as well as trader SZ, who are huge influences in my life, along with our very own Adrian, who's Crypto Burb. But the way that I like looking at the markets is in terms of liquidity, right? And where what ICT would call smart money, what I would say is institutional buyers, hedge funds, where are the obvious places that that price needs to attack in order to fill larger orders? And what we're doing is we're merely humble passengers, if you like, that are looking to just grab a ride on that extended trend, on that order flow of the people that are making these markets. All right, so that's certainly how I'm looking at it. But what I wanted to do was just look at our higher time frame first of all. If you guys have got any particular assets you'd like me to take a look at, we'll certainly chart them up, and then I'd like to just do a little bit of work on change in state of delivery and how you can apply that to your trading. And today we're just going to look at a really simple system of, okay, how can we get a really high win rate system built based on two very simple things: change in state of delivery and fair value gaps. All right, so before I rattle on anymore, let's take a look at the charts. I kind of extended my break away here, although I'm still working. We're still away at our holiday cottage in Suffolk. So just for some family reasons, but all good. So I'm going to be back at my desk full-time trading next week. And for those of you who are members with us, then next week is going to be really exciting, because we're going to be live trading NASDAQ futures together, at least kind of 3 times a week. So let's pop onto the charts. And the reason I wanted to look at this is, obviously I've been very vocal about this. I think that, you know, if you're going to put anything into this space, it's really important that you're clear and honest and upfront with people. And this is my kind of high time frame view. Now, this might seem obvious to most, maybe not so obvious to others, but for me, I'm always asking myself where price is delivering from. Yeah, and price was delivering from this bearish fair value gap, right? This gap here between the first and the third candle. Again, I would always recommend going to the source. If you're new to this, these are ICT concepts. There are other people as well that talk about gaps, but for me, I think he's the person that really kind of embodies it the best. And a lot of these theories are based around areas that he has taught, combined with things that I learned a lot from SZ. So what I'm looking for here is typically, where's price delivering from? Where's the most clear and obvious target, which is why we've been bearish for this amount of time, looking for price to come down to these lows, which are also relative equal lows. See this low here and this low here? Whenever you see lows or highs that are relatively equal and price runs that, it's an area that retail as such, or a lot of traders will see as support and resistance, right? So they'll think, oh, okay, price stopped here, price stopped again here, I'd expect price to stop again here. But how often, and no one says this better than SZ, how often would this be a deviation? Price climbs back in here, yeah, starts to build and then does something like this, right? Comes in, takes out, runs liquidity, gets back above, and that's terrible lines, unfortunately, because you can't really do it on the higher time frame charts. But that's exactly what we're looking at the moment. And now for me, it's quite simple. Because a few people said to me this morning, are you bullish on this now? Because, you know, we've got the deviation prices in. First of all, it's not back inside yet, right? That's a really, really key thing to remember. And if we're looking at this as a range, right, then what I'd be saying here is probably something like this, or maybe even being a bit more aggressive with this one here, just purely because, right, because look what happened here, right? Price came down, deviates the higher, steps back in, purges liquidity at the lows. Didn't quite tag that, which I would have liked to see, but did take out that low there. Obviously, whenever we engage with a range, then we're always looking for our equilibrium as well, which is our 50%. And we can see how price finds support of these areas, pushes up, comes back down, closes above it, pushes up again, big deviation, comes back within. See how it starts to cluster around the 50 here? And then we just get that purge lower. And now we're back down at the lows. If price closes back within here, that could be significant, but in truth, what I'm really saying to myself at the moment is, again, where's price delivering from? And price is now delivering from this bearish FVG on the daily, right? And there, you see them marked up on my chart, says FVG with a small d. Let me just pop back to the chat very quickly. Morning, Whack. Great to see you, buddy. Everybody else as well. Guys, I'm obviously just on a laptop at the moment, so I'm just flicking between the two. So if you have got questions, please don't hesitate to pop them in. But with this kind of system, we can be really, really clean. We can be really, really clear. We have a clear set of parameters that allow us to, you know, target these kind of more high probability setups. So let me get rid of that for a moment. Now, where would I start to get bullish again here? Now, bearing in mind the time frame is everything, right? So it's no good saying to yourself, oh, okay, well, I'm bearish on a daily and then dropping down onto a 1 minute and just taking the first short that you see. It doesn't work like that, right? It certainly doesn't work like that in my world. If we get a close above this fair value gap, and you'll hear me bang on about these a lot, then we get this fair value gap inversion, right? If we invert this fair value gap, meaning we close above it, that will then get turned purple on my chart. So you see that as FVGD. FVGI/D, meaning fair value gap inversion. It means that this is no longer being respected, right? And what happens when we get that is we're then looking for price to search and seek the next liquidity, which is here. What's really important about this high is this is also an intermediate term high, right? Hang on, certainly not an intermediate term low. There we go. Now, again, I'd recommend looking at ICT's core content on this, right? But this intermediate term higher here, and I also teach it in my course at the Bird Nest as well, for anybody that's interested, that's my take on it. The whole point is that we equip ourselves from our mentors over time. And I was very fortunate to be part of his original mentorship, which really, really kind of opened my eyes. But over time, I've worked with other amazing traders as well, like SC, like I said, I do work with Burb, other people as well in the space, Trader Dank, who I think is absolutely fantastic. But I've built these systems based around those concepts, right? So I do always recommend going to the source of it, although I'm happy to teach you how I use them. An intermediate term high, the key thing for me here is it's a high that's within a fair value gap, right? And what we're saying is here, if price closes above this, right, then the chances are that it's seeking liquidity higher as well, right? And the reason for that is price shouldn't really be closing above this. You should have lower highs either side of it, or it should be rebalancing fair value gap. So until we get that, on a daily scale, I have to remain bearish, okay? So what that then means is, that means that I'm using this area here on lower time frames to hunt for short setups, all right? Hey, Mr. Aim, my man, great to see you on here, buddy. Yeah, you. I was very, very fortunate to learn with them. As are you, mate. You know, learning a lot from my boy Trader Dank, who's just exceptional. SZ as well. I'd always recommend anybody check those guys out. There's something else, and also for people that don't, go and check out Aim. You know, really great up and coming trader. Small following at the moment, but these are the kind of accounts you want to find. Go and give that legend a check. Fantastic use of channel work and stuff like that. Is really, really clean way of trading. So let's move back to the chart for a second. High time frame view is that. For me, I would still expect us to reject here. And when we're looking at what our lower liquidity targets are, well, we're looking for our clean lows. We've got one down here, which is 36,714. And then basically the other thing that you want to look for is look at all these untapped lows, right? Juicy liquidity sat below all of these. Big gap here, right? So am I saying we're going to come all the way down to here? No, look, I'm not. Do I know where we're going to go? Absolutely not. My theory is purely based on where liquidity is resting, taking some high time frame views, decanting them onto low time frames to get these nibbles at order flow. So if anybody has any further questions on that, please do let me know. But if not, what I'm going to do is I really want to get you guys moving with a, you know, with a system that you guys can go away and you can test, because, you know I do a lot of education work on here. I do a lot of stuff that's based around hindsight. And I really don't give two craps about people criticizing me for that, because, you know, I've made my way in this industry from an absolute nobody who learned this from the ground up. I don't need to prove anything to anyone. So it's not why I do it and come on here. I do it because I was very fortunate to have people like ICT, people like SC, and other people who spent a lot of time, even Tone Vase as well, who was amazing to me, you know, giving up their time for free. And there's no way I would have learned this kind of stuff without it. So if this helps you guys, it's great. But I do appreciate that a lot of you want to look at actionable trade setups. I'm not going to give you signals. We have a paid service that does that. And even that, we always say to people, right, take those signals, use it to make a little bit of money. Just to put it in perspective, for the last 2 years, if you'd been part of our paid Bird Nest group, and I'm not saying you have to join this, there's more than enough free information out there that we provide as well, right? But if you had, and you'd taken our signals, then you would have made over 330%, which means that you could have paid for your membership and still had 200% profit on top. And what we say to people about that is just make sure that you're using that to make a little bit of money to pay for your education, so that you're learning how to do this yourself. There's a very good saying, which is, you can give a person a fish and feed them for a day. You can teach a person to fish and they can feed themselves and their family for a lifetime. That's the important thing here, is that you guys are developing. You're not looking there for the handouts. And that's what I love about our group, what I love about the people and the patrons that come and join me on here every single week. McRaw, great to see you, mate. Really great to see you. So let's not waffle on anymore. I think I've actually cut the waffle down quite well. Normally I'm a good 20 minutes on this. We're only 13 in at the moment. So let's have a sip of tea and work our way on some low time frame charts. How about that? So that's the high time frame view. If anybody has any alts or any assets that they want us to look over, then please do let me know and we'll make time for that at the end. But in terms of the trading system, let's have a look at what we can do purely based on an hourly chart. And let's hide all of this. Where are we? There we go. So nice clean chart. Now, quite often you see periods like this. Now, I know this is Saturday and Sunday. Let me just kind of highlight that a little bit better for you, where you get this kind of flat price action and bits and pieces. Now, if you go in and you start testing these systems and you take a few losses and that, just remember, it's not about what you return on it immediately. It's much more about what you return on it over time. All right. Time is a really, really key factor. And I don't know if I can access this, but I'll try and post it maybe on Twitter later. One of my students who I've been working with for just over a year at the moment, who we work on traditional markets, has just gone their first 200,000 funded account and are rolling out like an 84% win rate, which is just, it's just awesome to see. If you can just, but it takes so much patience and you've got to be willing to take your losses. So as we step into the day, or any day, I'm breaking down my trading sessions here. These are the kill zones, right? Again, a concept of ICT. This is when the highest volume, trading volume steps into the market. The orange dots here represent London. The blue dots here represent New York AM, and the blue dots here represent New York PM. I very heavily favor trading the New York AM session, right? But I do trade all three, and all three across different asset classes, right? Now, Bitcoin is actually one of the worst, in my opinion, you can trade on this. It's just, you know, you see much better volatility and stuff on things like ETH. But I'm going to use Bitcoin as an example because I know it's what a lot of people kind of turn to and they look at. So what am I rattling on about? Well, before we come into any of our trading sessions, so before we start New York, before we start London here, right, which London starts at 7 a.m., before we start the New York AM kill zone, which, so these are UTC times, by the way, which is 13:30, which fine, we can't really see that, agreed, yeah, on the hourly, right, because it starts here, but we're waiting for hourly closes or hourly states of delivery as we step into the time frames, meaning we need to see a fair value gap or a change in state of delivery to be our trigger. And then we're going to move to a 5-minute chart to find a really simple entry, which I'm going to teach you guys how to do. So let's just start with yesterday and work backwards, right? So yesterday working backwards, our change in state of delivery happened here, right? So what am I talking about here? Singular or consecutive down close candles, you see these two, when closed above the body, yeah, not the wick, that becomes a change in state of delivery, yeah, and we're then looking for price to deliver higher prices, okay? The only other thing that we're looking for is if price is delivering from a fair value gap. So we can see that we have a fair value gap here. To just show this off for people that might be new to the stream, I'm going to do my bearish fair value gaps in red and my bullish ones in green. Okay. When we close above or below these, we invert them and we change them to purple. But for now, just to focus on this, and we're going to start on this because I want to show you guys recency, just to show you that it's, you know, we're not just hand picking or cherry picking this TA. Stevie boy, great to see you. Asia's not marked on my chart. So that's a really good question from Erica. And let me show you about that. So see Asia not marked on your chart. I know you don't trade it, but aren't you considering Asia high and Asia low? I am indeed. And what you will see, Erica, is when we move to a lower time frame, my Asia's marked on this. It just doesn't show up on the hourly. So my Asia's range is here, yeah? It's unfortunately our fair value gaps are red here. But you see the red boxes? Yeah, to give us our Asia high, Asia low. All right, because these are really key liquidity pools that we take Asia's high here, trade to Asia's low. What do we do here? Take Asia's low here, trade to Asia's high. And what else does it tell you? If you have a really big session in Asia, yeah, over 50 points typically, then you can just expect chop in New York AM, and then you typically get a resumption of trend or a strong reversal. You need to just obviously check the signs in New York PM. So see this with Asia. Yeah, price consolidates here. We have a really big drop in London. What happens? New York, consolidate, take out the low of day, which is here, and then we have that reversal. So again, there's ways that you can learn those specific points, but that's a really, really good point from Erica. But yeah, it's, yeah, exactly. One for Erica there. Recency, baby. It is exactly what you want to be torn down in front of thousands of viewers about. No, I never did that deliberately. It was just purely for the fact that it means different things to different people. And the great thing about these markets is there's lots of different ways to trade them. So what's going on here? Here we have a change in state of delivery, right? Meaning that, basing it purely on that, we are on this candle here looking for price to draw up, right? Why would I be happy to trade this when it's drawing into a bearish fair value gap that's been respected? I am, but if I am going to trade it, I'm going to reduce my position size by 50%. Why? Because we're drawing into a bearish fair value gap, meaning that we could easily reject it. Because when we get into New York PM session here, yeah, price was delivering from this bearish FVG, right? So just so this gets in and really kind of sinks in for everyone, we're either looking for a change in state of delivery, meaning that once this candle closes above the bearish candles, either a singular or consecutive, then we're then looking for long setups here on the lower time frame. Alternatively, if we're delivering from a bearish fair value gap or a bullish one, but in this case bearish, then we're looking for short setups. Are we just setting blind limit orders? No, we're absolutely not. We are looking for further confirmation, right? So what we can see here is this is our draw here. Now, system that I prefer to trade, which is inversions, right? But we're going to look at something a little bit simpler than that today for people, which is we want to see price take out a low, Yeah. Then we want to see price break above a high, close above, and then retest it. So in this case, that would be our breaker line. However, we just got it. So I extend, by the way, for people that don't know, I extend the kill zone sessions. ICT runs them until 1600. I run them till 1700. That's just based on my systems and my data. Again, not recommending anybody does this, but that's what I do. Now, for me, what would have made me hesitant to trade this was the fact that we didn't sweep a low. Yeah. So yes, the trade worked. Where do we trade it to? So when we close above it, which we did on this candle, we put our stop loss below the low, right? And then we need a 1-to-1 risk to reward at the first high, meaning that we move our stop loss to entry there, trim enough for our fees. Yeah. Leaving the lion's share to run higher. Ultimately, we would have been stopped at break even. Now, what we can see here is that price doesn't give us the opportunity. Price actually tags in here, yeah, before this. And again, what we notice is, where are we delivering from? Hourly fair value gap, right? So everybody's with this. I'm just going to delete these just so that we can just keep a cleaner chart. We're now stepping into New York PM, right? That starts at 6:30 UTC, right? That's for equity markets, which is why we align that with Bitcoin. Now, the difference with this trade here is that we did get a sweep of a high. And we did have a clean and obvious low close below. Now, the issue that we would have trading this one is where we put our stop loss. Our stops would have to go above this high here, right? And then we're looking at our 1-to-1 risk to reward down here before we move our stop loss to entry, okay? So on this one, for example, we would have come down into here, come a gnat's breadth away, yeah, from tagging in here, and then price would have reversed on us. But does this make sense to everybody as a system? Really good question here from Steve, right? So no, a change of character is like a market structure shift, right? So for example, let me see here. Here. That's a change in character, right? Why? Because basically it's slightly different to a market structure break. This is a shift. Yeah, so I mark them up as MSS, but the original ICT teaching would be a change of character, right? Meaning that this is the high. So lower low, lower high, yeah? Higher, and actually this one isn't because it comes from a higher low, sorry. But what you would be looking for, as is typical when you can't find the blooming thing on here, is lower high, lower low. Okay, here we go. Something like this, right? Lower high, lower low. This then sets a higher high, right? Meaning that we would then look for price to draw down into our fair value gap down here, which would be bullish. And we would look to trade that to the next high, which is here. Yeah. So that's a change of character. It's different from a market structure break, because a market structure break would be any of these where you're coming from a lower low, lower high, higher low, higher high, right? So that's our MSB, which is a market structure break. And that's certainly how I've always learned it and still teach it today, right? So changing character is just meaning that you get a shift in market structure rather than a break. All right. So hopefully that makes sense, guys. So what we're looking for here, and I'm obviously typically favoring this on the hourly because this is the time frame that I think is really good for you guys to practice on, is this could also be, it doesn't have to be a high. There is a high in there, right? And actually this is also a change of character because it's gone from a lower low to a high, right? Let's just do that in red so you can see that. Right, so there's the high. So lower low, lower high. Why is that a high? Because it's flanked by two lower highs. lower low, boom, breaks that high, showing us that the market's changing its state of delivery, it's changing its character, or it's having a market structure shift, right? But until we go from a higher high, higher low and break the higher high, that's when we have an actual market structure break, yeah? And you often see these areas as good support and resistance. And if you find a nice fair value gap within there as well, they provide you some really nice entry opportunities. So just to clear that up, so this is what we're looking for, right? So let's go back now to let's look at Monday's trading. All right, I do prefer to trade these weekdays as well, I have to admit, because I like the way that they overlay with traditional markets. Yeah, so remember what we're looking for. We're either looking for a fair value gap, so we have a bearish one here. So this is now looking at London session, which starts at 7 a.m. So bearish fair value gap, which is where price is delivering from. Have we had a change in state of delivery here? Yeah, we do at the very end of this session. See it here? Here's our up close candles adjoined. There's the body. Price closes below here, meaning that right on the close, 10 till 11, we would look to take scalp shorts there. However, the first trade that we're looking to take is short here, because price, right, at the beginning of our session here has drawn up into, yeah, a bearish fair value gap, meaning that respecting this as it closes here, this candle, we'd be looking for shorts, attacking liquidity at the next swing low. Does that make sense, guys? Yeah, you're very welcome, Steve. There is, hopefully, what we can do is just look at this quite simple system we're going to cover today. And then from there, we can, that hopefully just kind of gives us something that you guys can kind of get your teeth stuck into, that you can go away and test. And then off of the back of this, you can learn other concepts that you can add to it. You know, you can start adding RSIs in, or, you know, using the Burbicator Pro or something, for example, or, you know, basically anything that you want to do to tweak it. But this is a tried and tested system, right? So you've got something that you can kind of build around the meat and the bones of. If it doesn't make sense, I'm going to continue on. I'll keep going over it. All right, guys. So here's our London session. We're short here. Why? Because, just put replay on. We're short here because we're delivering from a bearish fair value gap, meaning that while we respect this, our theory is that price is now looking to move to take out price lower. This red arrow here, yeah, means that we're short towards the end of this session, down towards that candle's low, potentially lower as well, but we're obviously just looking to scalp these. Why? Because we've changed our state of delivery. What's dangerous about taking this secondary one, which will be build out to on low at next sessions, is the fact that we've taken the low of day. These are often very good liquidity pools that lead to short-term pullbacks or corrections, all right? But we'll cover that in more detail. It's also something that I do cover on my course as well. So that's where we are for London. Now we're moving into New York AM session, which is 13:30 UTC. And we're saying to ourselves, okay, what are we delivering from here? Do we have a bearish fair value gap that remains unfilled? We absolutely do. So we've stepped into this. We're now delivering from this, meaning the start of our session here, or at 13:30, as soon as we've had this engagement, we can look in this area for shorts. Where to? Same principle again, just purely targeting the price swing low. We're going to decant this down further on a 5-minute, all right? Then we're saying to ourselves, do we have a change in state of delivery? We do. Yeah, so we see we close below this, nice body close below these 3 consecutive candles, meaning that we're going to pop another red arrow on here. I'm going to get rid of this one up here purely because I don't put the red arrows on those when I'm teaching. The red arrows signify change in state of delivery. That way we don't have to have these black lines on the chart, which just end up making everything look a bit muddy. However, as soon as we tap into a red box, that means we're delivering from a bearish fair value gap. As soon as we tap into a green box, it means we're looking for bullish trades from a bullish fair value gap. All right, guys? Okie doke. You just see the viewer numbers just starting to drop off a cliff. It's it's not as complicated as it sounds. I'm probably, unfortunately, making it sound more complex than it is. So now we're looking at our New York PM session. Do we have a change in state of delivery? I love this one, by the way. This is probably my favorite one. Why? Because This is a nice, good volume body candle, and that's a big body candle that's dropped below it. Yes, we've taken out low of day, so again, we need to show caution, but look how it trades back into this, which now becomes our order block, right? That's the beauty of this. That's just that's bread and butter. When you see things like that, you're just hunting this candle down, right? And we don't have any fair value gap to deliver from here. So we've got 1, 2, 3, 4, 5 short trades. Yeah, we're hunting 5 short trades at the moment. Just on Monday gives us 5 opportunities. So how do they play out? Yeah. Now, I know a lot of you guys are looking to trade these down on the 5 minute. Yeah. And I want to give you guys kind of a reasonable time frame to put these onto. But to be honest with you, with this type of system, and with Bitcoin, you need to kind of play not like the 1 minute, 2 minute really, because it can get very, very choppy. But the issue that you have here with Bitcoin, unlike alts, is that it just doesn't really move that great. Yeah. So this one would have given us a nice setup, London. And let me just give that a bit more context, right? So what do we need to see? We need to see a sweep of a high, which we get here. Remember, we're delivering from this. Yeah. Delivering from this bearish fair value gap on the hourly. So we're only looking for shorts. We step into our London session. Have we swept a high? Yes, we have, right? We also have an intermediate term high. Is it? Yep, just a small fair value gap there, meaning that we've swept an intermediate term high here. We have our lovely clean low here, which becomes our breaker line, meaning that we take our short position. Once we close below, we open a limit order here because it reduces our fees. Our stops go above the swing high, and then we're targeting that hourly liquidity. So there's our 3R trade here, right? We were also short here. I'll let you in on a little secret. Well, not a secret really, but something that you can just develops out. If you apply these in a fractal nature, yeah, fine. We didn't get a trade set up here on the 5 minute, but you would have got one here on a lower time frame. Why? Because we're now delivering from this bearish fair value gap on the 5 minute. So if we then move from a 5 minute to a 1 minute, for example, you would hunt that setup there. But I don't recommend doing that with crypto, guys. You just need a lot of chart time really to really kind of, as I say, learn, because I don't want to say for it to ever sound patronizing, right? But to really kind of conceptualize and really understand how the price moves on there, because you get so much noise on the low time frames, right? Now, we're at the beginning of our New York session. What have we done here? We've run into our hourly fair value gap, meaning we're looking for short setups. Yeah. We've swept a high. We've swept this high over here. We've swept local highs here. So we can see that stop losses have been engaged. That's what we want to see. And then the only issue that I've got with this trade here is as price comes down to here and we set this high, we'd be looking at price taking this out as our breaker line, right? Unfortunately, we just don't retag it. See, we just fail to retag it here. Had we tagged that there, so when we close below it on here, our limit order goes on there, our stop loss goes above the high, which is that swing high there. And then again, we're targeting our liquidity lower. We didn't quite get the pullback there, right? So that's not a trade that we could enter. We don't get a trade here because we haven't swept. See, there's no sweep of a high here. There's no sweep of a high here. All right. Price comes back into here. We're still bearish, right? So now we're saying, okay, where do we then get our sweep? Well, we get a sweep of a high here, right? But then look at where our low is. Our low is all the way down here. It's just too risky to take that, all right, as a setup. And I think we're going to probably see something similar here, where even though we're bearish from here and we do get our sweep, yeah, oh no, we don't actually, we do. So we get a nice trade here. Yeah, which would be our breaker line. Let me just move back to the comments for a second to see if this is making sense. E, my man, no, not at all. It's a lot of screen time, and then like a lot of screen time, right? And it's also a lot of just trying to keep it simple. I'm a simple creature, right? The seagulls, yeah. So we've got a little place on the coast in Suffolk, which we're at the moment, which is right along the beach, and the seagulls are massing and they are big. So they're currently trying to come for the stream, I think. But I can't. I don't know if I'm really not delivering this in the best and clearest way, really, but we've kind of like halved our viewer numbers are down by about 70%. So maybe not everyone wants in on the BC Alpha today, but well, Alpha sounds really arrogant, but just in terms of hopefully delivering something with a bit of simplicity, right? So let's just roll this out, shall we, on another day and another asset. So let's take a look at ETH. We had just an unbelievable run on ETH last week. See these are our change in state of deliveries. Some really nice trades here. Actually got stopped out on this first one after about 3 hours. We got this really nice entry on this one, which gave us about 7. And it's a shame because we wicked out on this and we worked out this morning. It was a 58R trade. Now, that's clickbait when you're seeing people promising you or targeting those kind of returns. We just simply don't. But that's why we hold runners, right? Same as this one here. You wouldn't ever hold this to this low because price would start coming back up here for your stop loss, right? But you can get some big trades, but don't really focus on that. Focus on building small and consistent wins. Yeah. Thank you, Grandmaster Pikachu. I love that. Brilliant name. Yeah, thanks. No, they are fairly advanced concepts. You're right. In my opinion, from the amount of, I've studied these markets for a long, long time now, and I've been very fortunate to work with some of the most exceptional traders of our generation, in my opinion, anyway. And often it's about finding something that kind of resonates with you. Like, I'm a very bad swing trader. I'm just too impatient. So that's why I like to kind of day trade, get in and out quite quickly, which often constricts me to equity markets and currency. Because, for example, like being long on euro, should check that actually, just quickly. Long euro USD this morning. Yeah, so look, just exactly the same principles here, right? Change in state of delivery, which is our green arrow. But yeah, anyway, I won't bore you with that. But basically, it's often on Bitcoin and crypto in general. A couple of things you're exposed to. One, which is slippage, the volatility also, which plays a factor, but also the fees. Yeah, so you always want to be really, really aware of that. So does anybody have somebody shill me a coin that you're looking at or something you'd be interested to see? And let's look at some setups that we could be walking into today. And we'll look at what the setups have been so far this week. So we can really start to kind of not program this in, but I can start to show you some kind of real examples, and then we can look to review these later down the line. Yeah, awesome. I mean, it can really help. And what you need to remember, or anybody needs to really remember when you're setting these, is if you're looking for a change in state of delivery, then first of all, what you really want it to be is, I'm just zooming in here to see if this was a bullish or no, it's another bearish candle here, wasn't it? Is you just remember to put it on the following candle. Yeah. So our change in state of delivery was here when this candle closed above, right? But I see people make the mistake of going like, oh, okay, that's the candle that closed above, we'll go here. No, because when you move down to the lower time frame, the hourly close was at 1500, meaning the hourly start of the next candle, when this is confirmed, is at 1600. And what we want to see at 1600 is we want to see price drawing down, yeah, into a fair value gap on a lower time frame. Like this. Bullish FVG. Right, price has come down. Remember what we said before, swept a low. So we got our sweep. Price is now delivering from this, yeah, which is a bullish FVG. And then we're either looking for our breaker line entry here, price to close above, retest it, and then we'd be looking to move our stops to entry at this high. Or, you would then decant that further down onto the lower time frames as and wish you would look for. Let's have a look. NXRA. Are you like a seed stage investor in this, Erica? I had been wondering actually. Awesome. You speak to Hunting Coin showing strength against Bitcoin. Do you know what, actually? Somebody really, really good at that is a guy called Bitcoin Charlie. who I'm kind of like a Twitter friend with, you know, one of those kind of digital mates that you've got. He's really good at that. What he does is he kind of overlays, he goes on like a line chart and then adds loads of different lines to the chart based on all the different assets, right? And then shows them on. And let me just find his Twitter handle for you, actually. He's just an exceptional trader. And I think tagged on the top of his, it was tagged on the top of his chart. If you go down his chart, yeah, even a few posts down, it's BTC_Charlie. Right? Again, no affiliation, don't work with this guy at all, but I'm a really big admirer of his stuff. And he's got a little video, just scroll through his feed and you'll find it, where he's talking about relative strength of Bitcoin against other assets. It's a really good way. Yeah, it is a sick chart, isn't it? It really is a sick chart. No, he's a really top guy. Okay, we'll have a little look at NRXA. Just because Jack was first in here, we will take a look at Rune. Yeah, and then due to a further pullback on that. Yeah, absolutely could be. Okay, and let's take a look at, okay, so I'm going to hold on to these. We're going to look at Rune, Link, and Mara, all right? And we're just going to draw a line under it there. Let's just quickly look at Rune. And then we'll just kind of look at this, and then we'll kind of look back a few days as well to give some trade ideas. But then our kind of focus is going to switch to the others, and we're going to look at live setups. Yeah, what I'm targeting when my AM session starts in sort of 45 minutes. Right, here we are. So beginning of the week, where were we? Here, Monday. So we're just going to pop a line on here, and we're going to say we'll look at Monday, Tuesday, and then where we are today. So first thing to note about today, right, is that we'd be long here. Would we? No. Oh, sneaky London session front ran us here a little bit, right? Because a few things. One, we're delivering from this bullish fair value gap, right? Everybody remember that? We're looking for two things here. We're marking out where our key liquidity is. Right, also we can't ignore this high. They were our targets. We'll just move these back otherwise. Also as well, when you see these highs and lows, if you see price displace over it like it did with this one, meaning you get a good strong body close and then retest into it here, probably means it's looking for higher prices, right? But ultimately, as we're in here, we also need to look left and appreciate we're delivering from a bearish FVG. However, the trend is your friend until the end, right? And at the moment, this is strong uptrend. So just purely based on our hourly, where we are today, we unfortunately got a little bit front run by our change in state of delivery. Yeah, which was here. Because it actually changed state here. So it started at 6 a.m. By the time we got into here, it was a bit treacherous because we're looking then at high of day. But what I was teaching about in terms of looking at displacement and your typical almost support resistance flips, strong close above, retest of this, chances are it's now looking for liquidity a bit higher up here, all right? Which is something you can factor in, but I would also make sure that you test. Now, the only other thing that would consider us being long here at the beginning of London would be the fact we're delivering from this bullish FVG and we have no other bearish fair value gap here until we get to this high. So the one way that you could trade this, and we need to do it at the beginning of the London session, which is here, is we just be looking for the same, right? We've got our pre-made target here. This is where liquidity is most likely to run, or not, sorry, where price is most likely to run is to liquidity. Price very rarely just reverses in the middle of nowhere, right? So we're bullish here, but we needed to wait for the start of our session, which is here at 7 a.m. What do we want to see? We want to see exactly what we discussed before, right? Price delivering from a bullish fair value gap. Price draws in. What else do we want to see? We want to see that liquidity's been swept. We then want to see the high broken, closed above, which gives us our entry. Now, the question you've got to ask yourself is, would this trade here be worth the risk and reward, considering that that's your target? And the answer is no. All right. So yes, price came up and hit this, but we didn't know that. Price could have easily reversed here and then you would have been stopped out. All right. So again, it's all also about factoring in your risk. Now, all we're going to do, we're just going to go back and we're going to overlay these same principles. Yeah. Yesterday. So we can see here. Now, starting with London. Right. if I make this big, let's ask a question, right? So when a fair value gap is filled by the bodies, for me, it then becomes invalid unless it's closed above when it becomes an inverse, right? So that's important. So as we step into our London session here, can anybody tell me if within these yellow boxes, we have price delivering from a bearish fair value gap, or do we have price? And I'll just draw this one in just because I know you guys can't see this directly, just so you know it's not from here. Or do we have a bearish change in state of delivery? Anybody? Abidami, apologies if I've absolutely murdered your name. English, so my handicap is often speaking and certainly speaking foreign languages, which is a shame. His name. Bearish CIST, yes, Geo, in there first for the win. As soon as I eventually make some merchandise, which is probably going to be those Pepe eyes, you're going to have one of them in the post, right? Bearish, yes, bearish, beautiful, bearish change in state of delivery. Why? And sorry, mate, just in terms of this question, I love that profile pic, by the way. Let me know whose name you're after. Was it Bitcoin Charlie with the charts? My name's BC Richfield, or was it the name of one of the elements we're looking for? I don't want to leave you hanging there, mate. So yeah, exactly. As everybody that's thinking it, or especially the people that said it, don't be afraid to step up. There's no stupid answers in this. We've all been at the beginning of this journey at some point. Here is our bearish change in state of delivery. Yeah. No, I mean, I won't draw it in. You guys know what it is, but we're going to do it with our arrow. Yeah. So remember, it's not this candle, it's this candle. Right? Do we have a pre-made liquidity target? Sure we do. Where's the next swing low? It's here, right? So we're not saying that we can get this down to here. We just want to get some action in here that allows us to trade it down to here. It doesn't look like a lot, right? But, you know, if we get in at the top of this move down to here, you've got 1.5%. It's more than enough for a scalp. Yeah? So change in state and delivery, bearish, beautiful, beautiful, beautiful. Now, New York session. What are we doing when we come into the New York session here? We've delivered from a bearish fair value gap, but we've taken low of day, meaning we're not delivering from there anymore. Low of day and high of day are their very own standalone liquidity pools that are very, very lucrative to trade, right? What I now want to do is look back and say, okay, is there any fair value gap here we're delivering from? If there was a bullish FVG here, for example, yeah, which there isn't, but if there was, then I'd be looking to go long here. But I'm certainly not looking to be short because we've taken low of day, right? Now, the other good thing is, why would I long this when we've got a bearish fair value gap above here? Why would I long this? No, nice point though. Yeah, so 3 drive, like that a lot, Humdrick. Not something I'm really a massive teacher of, actually. There's an amazing trader called Ape Durden, known as Tyler Durden, who teaches these traditional patterns. He is absolutely superb at that. But yeah, what Humdrick's alluding to here is the fact that we've driven in for liquidity here, driven in and taken the low again, and now driven in for a third time. First of all, I love this pin bar, which just looks glorious. We failed to displace below this low, meaning that we've had no candle body close. But it isn't actually any of those points, right? And it's a little bit of a bastard question to ask. Confirm close above. Yeah. Hammer candle reverse. Yeah. All very, very good points. Yeah. Confirm close above. Close. Hammer candle reversal. Yeah. But actually, beyond all of that, the really key thing for me here is that we've taken the low of day, which, as I said before, is its own liquidity pool. Yeah. You can also look at prior days high, prior days low, stuff like that, for example. But just looking back really, really randomly to this section, just so that we're not cherry picking, just showing you low of day. Yeah. High of day. What happened? Low of day, big reversal up, high of day, down, right? Trading both within our New York session here. This day, as we come into it, Low of day, failed to displace below, price goes higher, right? Now, obviously, it's not always the case, but look, this was the high of day here, and also Asia's high as we came into London. What did we do that we didn't do here or here? We didn't displace above it, right? I'll do another stream on that just to keep it clean, because I don't want to make it too waffling. I want to get this wrapped up in the next 10 minutes for you guys so we can keep this to an hour. But they're all very good points. So the key thing for me here, guys, is we've taken low of day. There's no bearish fair value gap above. The next bearish fair value gap is here, meaning that as soon as we take low of day here, what have we done? We've taken external liquidity, meaning that we're now heading for internal liquidity, which is the start of this FVG, which is 2.68% away. So we're looking to scalp the living daylights out of that, right? Now, where are we here? We're delivering from a bearish FVG, right? Meaning that as soon as we do that, once we interact with it, and we have to interact with it, yeah, we're now looking for lower prices. Where would we be looking to target? Here. But only if we get our setup, right? Only if we get our low time. And I'm going to still keep this on the 5 minute, but I would say to you guys, you can play around 3-4 minute as well for clarity, but let's keep it on the 5 for now. So there's the low, but we would only be looking for our lows here, because this interaction here, which is a lovely bearish pin bar again, it's delivering from a bearish FVG, but it's then re-delivering from it here, meaning that we really want it to be interacting with it before we're looking to go short, okay? So let's just go to our 5 minute quickly. Right, and we can see on the 5 minute, we just don't have enough bandwidth here. But on these type of time frames, as long as you've got your percentages, if we were looking to drop this, which I favor, obviously trading on a 1 minute, you know, look, again, just really clean, really simple. Are we delivering from a bearish fair value gap? Yes, we are. Do we break the low with displacement? Yes, we do. Right. That becomes our breaker line. Small close below it, retest of it here. The big question here is, do we have enough risk to reward? Don't think we do. But let's have a look, because I want to move my stop loss to entry here. Oh, okay. We sneak in at 1.03. Doesn't take our stop loss. Ultimately then reaches down for lower targets. All right. Again, I'm not encouraging you guys to trade this on the 1 minute. It's just with this type of theory on the hourly, you can use I do really favor these lower time frames, right? But you have to have the percentages, which is what it's really worth just pointing out here quickly. You see this? That's a 0.77% stop loss. Why is that really important? Because my boy Razun and his legendary position size calculator will tell us we want to work out what our fees are, right? Some of these fees can be expensive. So as we're looking at this, we're looking down here, our entire position size based on a $20 stop loss, which is just on a small account. I appreciate a lot of people here aren't trading big accounts. You don't need to, right? $20 is our stop. What's our fees on that? A couple of bucks. Yeah. So when we get to this first low and we've moved our stop loss to entry, which is here, when we're at 1R, we only have to take $2 out of the trade. That means we've left the rest in there. That means that's a lovely win, $80 return on that. Or maybe not quite, because you'd obviously trim some profit, right? And just quickly, a really good way, if you're looking for targets, is to use your standard deviations. What we take is the manipulation leg, which means this move higher before the drop. Yeah. We then take it from the high to the low. Take full profit at 4. And move stops to entry and change between 2 and 2.5, whatever your testing allows. All right. Just for anybody that's interested, all you're doing with that is you're just adding a 0, a 0.5, a 1, a 2, 2.5, and a 4 to your Fibonacci. You click OK. And then if you're looking to short, you just simply find the high of the manipulation leg to the low. So remember, it's the manipulation is the move higher before the drop lower. If we were looking for a long, it would be the opposite. All right. So let's just go ahead and look at our New York session. Right. What did we get here? Low of day. Remember, so important, but we still need to see the signature. If you want to be extra risk averse with trades like this, you can wait for your structure shifts, right? We get a very small sweep here. A nice displacement above it, right? But we don't get a shift in structure. if you want to really be certain, or not, you're never certain, right? But if you want to look at this on the lower time frames, then what you really want to do is you can see here, you've had the shift, momentum, look at this displacement. And look at this beautiful ready-made fair value gap. And then all of a sudden, where's price going to reverse here, right? We can see the relative equal highs here, which would be our initial target. You could enter on the retest. You can enter within the fair value gap. You've got your pre-made stop loss below 0.90, yeah, 0.9, almost 1%, which means our fees are going to be really low. We've got a 2.5R trade. What have we done here? Remember what we said? We're engaged with our higher time frame. That means that we can only be looking for shorts here. Sweep. Right. Price goes up. This low, as far as we don't get into that low there, do we? Right. What do we do here, though? Delivering from our higher time frame. Yeah. So that's our hourly FVG. We then look. Price comes down. Sets this low. Do we displace below it? Yes, we do. We get a nice breaker line entry here on the retest, stops above the higher. We also get our fair value gap in here, showing us that the momentum of the market is with us. Stops above here, 0.41%, lovely. Probably stops to entry around these equal lows. Equal highs, equal lows tend to be good liquidity pools, right? Ultimately, we don't hit that. And what we do is we then drop all the way down to here. You would probably get out of the trade round about here, I would say. By the time you see this strong reaction, we break to the upside, right? And again, look for your highs. Look how well that's respected. Displace above it, retest, 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 and price is away. Yeah. Then where are we? We're in our New York. But I mean, you get the point, right? I kind of rattled on a little bit long on that one. Hopefully it wasn't too convoluted. Let's just take a quick look at the questions. Hey, Tammy, lovely to see you there. How have you been? Mr. Ribes. Or MJ Ribes. Yeah, BTC just broke below diagonal support. Cool, let's look at that. Lots of confidence at 37K. We'll have a little look on that one. Lots of love, Tammy. Thank you. You're a star. How many trades on average do you take on a week as a full-time trader? It depends on the system, because obviously I share trades for a living as well. See you later, Craigie boy. Always great to see you, mate. Have a good day at work. It really, really varies for me if I'm scalping. Like, normally I'm kind of looking at a target, really. I try and get all of my trading done in New York. I certainly don't chase anything, but especially if we've had a run, a high run in Asia or that, like we got quite recently, then I probably look between, I would say, sharing trades, taking trades, anywhere between sort of 3 and 7 a week is kind of my sweet spot as a day trader. But that can easily be 10, 15 trades as well, right? If I'm really nailing down into the 1 minute. Let me just look back for a second, because Erica wants us to that little NXRA. And then it was Link, wasn't it? I did promise I'd cover both of those, so let's absolutely do that. Where's that crazy NXRA? Sure, we added this before, didn't we? Maybe not. Oh. NXRA. This one, isn't it? NXRA USDT. Possibly looked at the KuCoin one, did we? Yeah, we did. So just very quick little peek at the higher time frame, what we were looking at. We're at that really key SR level here. Look at this. This has just been a beast. Really clear to see this. Look, rejection back here. That's from this high. Above, deviation, price comes above, holds, holding again now, right? A little nip below this would be interesting, but just purely basing it on our hourly system, little bit kind of gappy, kind of a little bit more of an investment vehicle, isn't it, this one, than a day trade. But, this is what's capping it. Right, that's capping the market here. I think what you'd want to see is a decent close above this here. I'd have a little bit of eyes on it when we get to here. But what I really like about this is that we're really looking at these clean highs. Intermediate term high here, which would probably be my main kind of standout target there. But apart from that, really, you're just chasing down highs. There's so much liquidity resting in all of this move down. You can see how really choppy this was yesterday, for example. Would have been probably quite beautiful to trade here. Yeah, look at that. Change in state of delivery here. This big close below, so bearish from there. New York session when we stepped in, delivering from this imbalance here. So PM session would have been a beaut to trade lower as well. But look at this. This was just ugly, ugly PA. We got a change in state of delivery here because we closed below this one here. So meaning we would have been bearish from there. In this session, bullish. Why? Because change in state of delivery here. PM session, we would have been bearish from here. This one will be a bit gappy on the lower time frames, right? So you'd probably be looking at a slightly different entry method here, but ultimately we kind of got the short down to the lows. This was quite a nice setup here to the highs. This would be quite a treacherous one to trade. This is much more, as I'm sure you're aware, Erica, much more of kind of an investment focused asset based on the fact it hasn't got a futures contract anyway. What was the other one? Link, wasn't it? Ah, the KuCoin one. Awesome. Let's have a look. There we are. I was thinking, thanks. You're welcome, Stevie boy. Well, look, I know we've just ticked over the hour mark. I did promise we take a look at Link as well. I don't know if the chap is still on the stream that requested that, but I do like to keep my word. Zoom out and see if we got any squiggles on here. Trading this heavily, as you can see here by the data. Just all change in state of deliveries here, guys, by the way. Exactly the same principles that I'm teaching you. So what did we have this morning? So price stepped in here. We changed delivery state here. We changed it here. So we would have been long this asset this morning from the middle of London into this high, right? Remember, we're just targeting key. What is this as well? That means it's a really key liquidity pool. Is it's our high of day. Yeah. Now we've taken the high of day a little bit early. We haven't really got any FVGs here, although beginning of our London session, we would have been bullish as well because we're delivering from this fair value gap. Remember what I said, price needs to be engaging with it, which it does here. Yeah. So again, I think we'd want to be favoring this on a lower time frame, guys. So 1 or 2 minute. So price engaging with this here. What do we want to see? We want to see price delivering from a fair value gap. So we would have had this here. Delivering from a fair value gap, sweeps a low, breaks the high, unfortunately doesn't come back for our breaker entry. Yeah, so swept that low, delivering from this fair value gap, breaks above, doesn't retest. Otherwise, we probably would have been out there at evens. We don't get a break here. We do get a nice sweep here. And we're delivering from this bullish fair value gap, which you can see here, right? So then what we're looking for is we're saying, okay, do we get a sweep? Do we get... Oh, I click on that accurately. Above, retest, kind of takes out this high as well, would come back again and kind of take us. If we'd moved our stops up here, we'd kind of get taken out at entry there. Again, looking at this on kind of a higher time frame, we've now taken high of day. I don't think we really got the short within our session. We didn't. So just looking back on this now in terms of Link, then what I'd be concerned with here with Link is before here, now we've purged this high, which is an intermediate term high because it's rebalancing this bearish fair value gap. Get rid of that. This is now where price is delivering from, right? We've then got this low here, which is an intermediate term low, okay? So that means that as we're coming in from this, we're moving into this low here. If we see price close below this low here, I'd be looking for a retest of this area in New York, right? Obviously, you know, in line with our principles as well, even better would be to see a fair value gap left in this area. But, you know, price could easily dip into this area here, hold this intermediate term low and move higher. So just because we're delivering from this at the moment, we still want to wait for our sessions to start. And then we can kind of look a bit closer at that. In terms of yesterday, Yesterday was just a beautiful day for trading Link because we had our change in state of delivery here, purging into the lows. We taken low of day here, which got us a little scalp higher. If we took it, I would have absolutely been favoring this for New York. Yeah, see in this session here, we've driven up into this, try and get our short triggers a little bit lower. And then ultimately we can see we closed above this here, meaning that this would then become an inversion, testing back down into this bullish fair value gap here, which pushed us up to this high. But when price is in this kind of state of consolidation, obviously we want to be a little bit extra cautious. And what we would obviously do is just, we would look to drop this down onto the lower time frames that we can. I think we would have probably just got a breakdown in entry here actually on this short, which would have been quite nice. But that's really how I'd be looking at it, guys, when I'm on this, especially at the moment. I know we get these really kind of big drops, right? And everybody wants to rush into the market, but just be, you know, I would say just be cautious, find the things that suit your system and suit your setups, all right? But we're going to leave it there, guys. Hopefully there's been something of interest in that for you. Please do let me know. You can come along. We've got some really exciting stuff coming up at the Bird Nest at the moment. We've got a big launch that's about to happen. That's, you know, I can't tell you too much about it until it's released. I'm not sure if Burb's released it all yet, but when that comes out, that's going to be super exciting. Also, come and be involved with us at the Nest. You can take free trials. You can join free and be involved in the public chat. We try and share a lot of free alpha as well as paid. And also, I'm going to have some really exciting stuff coming up for you with our partner Prime XBT, where you're going to get access to my live trading accounts, all of our live calls and that as well, just by a little sign up with them. So hopefully have that being announced in the next couple of days as well. So do trade safe and be safe. Awesome to see you all on there. So many people on the stream today. So thank you to each and every one of you. And I'm going to be back in the full flow as of next week. So we'll be back Monday, we'll be back Wednesday. And for anybody that's a member with us over at the Nest, which I know there's a lot of you, we'll be live trading NASDAQ next week as well. And also some crypto contracts too. All right, guys, have a fantastic week. Do pop in and say hello to us at the Nest, and you can catch me on Twitter as well. Trade safe, and any feedback is always appreciated. So please don't hesitate to leave it. Have a great week, guys.